And it's 10 a.m. right here in Lagos, Nigeria. Good morning, good evening. Wherever in the world you're watching from, it's Business Morning live on Channels Television. Let's kick off your morning now with the markets. We see oil prices fell for a second day in early Asian trade. We see Brent there trading down about 62 cents to $92.24 a barrel, while the U.S. WTI crude futures fell 65 cents to $84.94 a barrel. Brent dropped by 1.1% and WTI declined by 1.5%. That was yesterday after Russian oil shipments via Druzhba pipeline to Hungary restarted. We'll drill down on that in the commodities market update. Now to news from around the world. Now, the African Development Bank has approved an investment of $20 million in private equity fund to promote renewable energy in Africa. The Evolution Fund seeks to mobilize about $400 million into renewable energy and resource efficiency assets across sub-Saharan Africa over a period of 10 years. According to the AfDB, the bank's investment in Evolution Fund 3 aligns with its High Five objectives and will assist regional member countries to achieve their nationally determined contributions and Paris Agreement obligations. An economic think tank, the Center for Promotion of Private Enterprise, has recommended some measures that can help tackle Nigeria's surging inflation, which has risen to a 70-year high of 21.09% in October. In a statement released, the CPE Chief Executive, Dr. Muda Yusuf, mentioned that the measures required include urgent government intervention to address the challenges bedeviling the supply side of the economy, addressing production constraints, fixing the dysfunctional forex policy, and institution of fiscal reforms to curb escalating deficit spending. Dr. Yusuf adds that the government could tweak the tariff policies by granting concessionary import duty on intermediate products for industrialists, especially those in the food processing segment of agriculture value chain, which could give producers and citizens some relief. And the Senate has resolved to provide legislative support to the CBN to redesign the 200, 500, and 1,000 Naira notes. The upper chamber is making this resolution after a heated debate on a motion moved by Senator Uba Sani on CBN's policy to redesign the Naira notes. The majority of senators across party lines support the redesigning of the Naira note, but some of them are concerned about the deadline set by the Apex Bank for the old note to be deposited in commercial banks. Our correspondent Linda Ibe reports.
Excuse me, time is of the essence.
The Senate resumes plenary session a month after it suspended sittings to allow its committees hold budget defense sessions with government agencies.
The Senate knows that currency management is...
In the period when plenary was suspended, the CBN announced a policy to redesign the Naira, and that policy is a major agenda before lawmakers on Wednesday.
The redesign of the currency will help halt further depreciation of Naira as the higher denomination and the volume of banknotes outside the banking system used to attack the currency will reduce.
Just as the redesign of the Naira note has sparked conversation across the country on the merits and demerits, lawmakers too have strong opinions on the policy.
Mr. President, I am in full support of this motion. But I also believe that there are serious issues to be considered. One of them is the one mentioned by the minority leader on the window open to everybody to exchange their money for the new one. 1 month and a half is extremely short for what we're about to do.
In my state, we have 27 local government. After the insurgency, as it is now, we only have 5 banks in the 27 local government. And you know, if this is implemented without adequate arrangement, people will have problem moving their monies to the central banks. The insurgents, armed robbers, criminals will virtually be looking out to waylay them and take away the little they have.
A passionate contribution by Senator Basi Akpan did not go down well with some lawmakers seeking the extension of the deadline, and this almost throws the chamber into a rowdy session.
People are stashing away billions of Naira cash trillions in the cash all over the world in this country. So we must support the Central Bank of Nigeria. I'm not sure you are certain here that we are guided by the extant laws. That law made by the National Assembly does not require Central Bank of Nigeria to seek the support of the National Assembly. It does not.
Senator Akpan, take your seat. Gentlemen, please take your seat. Take your seats.
After calm was restored to the chamber, the Senate resolves to provide legislative support to the CBN for the redesign of the Naira notes. The upper chamber has also directed its Committee on Banking, Insurance and Financial Institutions to embark on aggressive oversight to ensure that Nigerians, particularly those in the rural areas and the unbanked, are protected by the CBN and financial institutions, and to ensure that they are also not shut out of the process. From the National Assembly, Linda Akibi, Channels Television News.
Welcome back. Now for Commodities Market update, we have Bolanle Agbaji, now analyst, financial derivatives company, join us right here in the studio. Bolanle, great to see you again.
Hi, good morning.
Yeah, so the last time we spoke, the inflation numbers were not out, and it came out red hot.
Yes,
21.09%.
Which was in line with our, forecast. We all expected that, inflation will continue the upward trajectory. And that's just because of the sentiments that we're seeing, in the markets, out in the economy as well. The fact that, even though the floods have kind of eased, but the aftermath and the after effect is still going to be faced for some coming months. And the fact that, there's still so many cost push factors that are still stoking inflation in the market. So we don't expect that inflation numbers will decline anytime soon. I know that the MPC committee is meeting next week to determine whether they would, more or less increase interest rates or keep it the way they are. And we do believe that, because of the way inflation is skyrocketing at the moment, we do expect that they would most likely, increase interest rates to combat this situation.
I know we would expect an increase, but how big?
I don't think it would necessarily be as much as, and just because the level of increase in the inflation rate is not, as much as what we had expected. I think we predicted about 21.32, and it increased by only 21.1%, or 21.09%. So, which was slightly below our forecast, but is still, following that upward trajectory. And obviously, the Christmas season is coming up, and we do expect that in December, the numbers for November and December would actually increase significantly. And
there's still that debate that the real inflation figure for Nigeria is around the 40s.
So, well, we don't know about that. What we do is follow, the Nigerian Bureau of Statistics reports that we have at the moment.
So we keep to the reports.
Yeah, we keep to the reports. Yes.
Quite interesting. So I've noticed the equities market has not really reacted much, to this, even though we've seen that downtrend, in the market, but after this last report, we got a green close yesterday. Is it that investors don't really care?
No, so what happens in the stock market generally? They've already priced this in, and the global atmosphere now is more or less high inflationary environment. So most investors have already factored that in. So having that significant impact on the equities market is not as expected as it would have been in the beginning of the year, where you didn't have all these general factors that were affecting the global economy. Yeah. So I think that's the reason why.
Quite a big word for the biggest word in 2022.
Although the EIU released, their global outlook for the next year, and they do expect that these inflation numbers, or the global inflation numbers, to decline to about 6.9 from about 9.4%, which is quite huge. And that's just because, as much as you have all these economies entering either technical recession or about to go in, they do expect that this should taper from at least the middle of next year. And so that's good news for us, and it'll just be nice for us to watch and see what happens. Regarding the war, nobody knows where this is, going, and all of that would obviously have been priced in. Some of these countries have tried to position themselves in such a way that they don't have to, depend so much on Russia as the lead, supplier of so many agricultural commodities.
And we're seeing the U.S., they seem to be getting, better than expected.
Yes, they do.
Results with their PPI, and CPI, the last one that came.
Yes, yes. And also, when you're talking about global agricultural commodities, it has also factored in their prices as well. The fact that U.S. is one of the top producers of corn and wheat, and currently we're seeing, prices is, not marginally, but it's still on the high side, but at least we're seeing good news there with reduction in, and that's just because you're seeing an increased supply of some of these particular agricultural products. And even some African countries are also, positioning themselves in such a way that they become one of the leading producers of several agricultural commodities, and it would be nice for Nigeria to also, join and be part of this as well.
Yeah, that'll be nice to see. And talking about new highs, you see in the UK.
Yes,
we've seen it's going deeper into double digits.
Yes, yes. So it's most analysts will say they've already entered the technical recession, and it's expected to get worse from there. And that's just obviously feeding off from, because I think the UK they're one of the major consumers when it comes to several commodities or global commodities, and obviously the natural thing is to feel the impact of the higher prices that we're seeing in the market. And I'm sure obviously the fact that the EU is also increasing interest rates, the UK as well, and all that would obviously factor into the consumer demand and the consumer household, the disposable incomes of those consumers, and that obviously factors into the general economic atmosphere. But we do hope that at least towards the end of next year, most of these countries start to balance themselves. And also China is having that impact on them as well. The fact that they're not, buying as much as they used to for several commodities. And that's just because they're still in that pragmatic space of making sure that COVID ends, as soon as possible and ends completely. The zero policy that they want is what they're, focused on at the moment. And that's obviously reducing the demand for several commodities.
All right, let's look at the oil market now. We're still seeing that, volatility there, and
yes.
Today we're seeing Brent down.
Yes,
again.
and that's just because, we had seen the news of Russia. Their major pipeline has actually come back into the markets. It has resumed, and obviously when you have increased supply, that obviously more or less reduces the price of oil. But at the same time, you're also seeing that demand slow down in China, and we already know that has been playing in the market. But when you have supply, but although according to the EIU, they do expect that oil prices don't fall below $90 per barrel, at least up until next year. So it's still good news, but the sentiments are quite they're quite funny, volatile, extremely volatile for oil prices and the oil market.
I'm betting the volatility is still expected to
yes,
persist.
And obviously to watch what OPEC does on the 4th of December, to be an interesting time to see. I'm not so sure if that's the last meeting for the end of the year, but it would be nice to see what they do and going forward, and what their outlook is going forward for oil price, oil demand, and all that.
All right, let's look at other commodities now. We see cocoa. We did talk about cocoa last time, but
yes.
There's still a slide.
Yes, so there's still the slide in prices. It's currently just above $2,400 per ton, and that's just because you're seeing increased supply in Ivory Coast, and I'm sure Ghana is also bracing up to boost supply as well. But like I mentioned, earlier or before, the fact that they're trying to increase prices of at least the floor price of cocoa, we do expect that going forward we should see prices inch up slightly, even if it's not the percentage that they were looking for. But I'm sure prices of cocoa would actually inch up marginally.
We're seeing wheat also down. No surprises there.
Yes, no surprises there, because most of these wheat growing countries have actually increased production, and I think this is the season for boosting wheat, so that's great for us as net importers of the particular product. So yes.
And let's bring it down to currency now. We got that report saying Nigeria may face its biggest devaluation
Yes.
in 6 years.
So the basis of the report was just like a survey by Bloomberg, where they, interviewed some investors and analysts and asked, what the expectations of the devaluation of the currency would be and when, by how much as well. And they came to the conclusion that they do expect that there'll be devaluation after the elections, which is normal because nothing major would happen before the elections. And then most analysts and investors expected that the devaluation will be between 20 to 40%. So, but that was also limited, by the fact that who are we going to be who are we going to be electing, and would that person be business focused and business savvy? So those are the limiting factors. But it would be nice to watch and see what happens. But a devaluation is imminent and it's necessary and is definitely going to happen at some point next year.
And looking at the parallel market, I was celebrating, the last time the Naira strengthened.
Yes, unfortunately, that volatility has, and it's gone back to, where it has always been. We do hope that it doesn't fall below 810. And we're trying to be positive about it. And, the external reserves are also declining. And hopefully, with the boost in our oil production, we do expect that at least the CBN can continue to back up the Naira and make sure that this doesn't fall below a certain level. And hopefully we see some money coming in during the Christmas period as well from people visiting, and hopefully that has some impact, not major. I know that's not going to be major, but at least some slight positive impact.
So I guess we're still looking at the just got back crew, for some.
Not necessarily as much, but we should rely on them slightly, at least during the festive period.
Right. All right. Talking about festivities now, we're getting in there, gradually. What's happening with domestic commodities? So
domestic commodities are still at record highs, although they're not as high as what it used to be in 2022. Earlier in 2022 and 2021 when you had those COVID situation. But at the same time, prices are relatively high. Harvest season is not able to filter through, and reflect on prices. But it'll be nice to just watch. And I understand that, during this period, spending would not be, as much as we had seen in previous years and years when things were, amazing for us.
So talk about checking the state of the consumer right now. The consumer
incomes are very low, so we don't expect that there will be huge demand. But at the same time, there could be some resistance with the prices just because that demand that, some of the market sellers expect is not there. So I'm sure the prices wouldn't go as much as what they are at the moment.
All right, we'll keep our eyes on those prices. Thank you so much, Bolanle Egbade, analyst, financial derivatives company. Thank you so much. Welcome back. Now to our next conversation. Well, Japa seems to have become an accepted word now. Many young and skilled Nigerians have relocated to other parts of the world, like the UK, US, Canada, in search of greener pastures. Have you ever thought of who will fill the employment that they are leaving behind and the impact it's having on business corporations? Well, joining us now is Ms. Bumi Lawson, MD founder, Edfin Microfinance Bank. Joining us via Zoom. Great to have you on the program.
Thank you very much. It's an honor to be here.
Yeah, so looking at so much talk about talents leaving the country, even though we're seeing mass layoffs out there. Can you paint a picture how SMEs here are affected by this new trend?
Yeah, thank you very much. SMEs are greatly affected. From the studies, the Nigerian Bureau of Statistics reports that SMEs contribute 48% to the national GDP and employ over 60% of our youth, as well as the labor force, especially in the area of agri. And when you see a lot of staff leaving, SMEs who are not able to pay high salaries, the competitive rate that the bigger salaries are, tend to lose good staff and are not able to replace them. So that affects productivity, the success of SMEs, and so on and so forth. So what happens, especially in sectors that have to do with medicine, IT, that SMEs may operate in, you find that there's scarcity of labor. Although what I've seen is that a lot of SMEs have become innovative in the way they now recruit staff, allowing work from home or work from any country, contract, consulting, outsourcing. Those are some of the things that they've done to bridge those gaps. I would say that in the areas of agri and, where you require low skills, low technical skills, they may not have witnessed such significant losses in human capital, but it's affecting, across the country. You will see that that loss in brain drain is really affecting businesses, especially in the area of human capital.
I would say a lot of Nigerians are, getting jobs, from outside the country, remote jobs, that is, and while still, living here in Nigeria. How is that, impacting in any way?
Yeah. So it has both its good and bad. First of all, it helps expand, our ability to earn foreign currency. So you're still here, and some of the work you're doing, you may be earning dollars, pounds, or, and you may be in Nigeria and you're working in America, India. In fact, some of them also have multiple jobs, and so that helps to increase their income stream. But beyond even for the individual, it also exposes you to additional skills. So if, for instance, you're in Nigeria and you're working in any of the large companies like Alphabet, Google, and so on, you would be exposed to training, and all sorts of courses, people all across the world. So you're learning skills as well that we can actually use here in Nigeria to develop our own skills and businesses and so on. So it does, there's two sides of the coin. There's a bad side if there is no give back into society, but where skills are improving and you have access to superior education that maybe we cannot get in Nigeria, then it helps to increase the skill base. So I would actually even advocate that maybe those who are working here have an immediate short-term positive effect than those who actually relocate and may not come back.
All right. What sectors would you say are most impacted, by this talent shortage?
Yes, certainly. I think the one everyone knows about is the medical industry, from nurses to lab technicians, doctors. I mean, every day, almost every day, you read on WhatsApp and newspapers talk about the number of doctors. Just the UK alone signs up Nigerian doctors. So there is a significant shortage of doctors. I think I was reading in one place where they said there was one doctor to 100,000 Nigerians or something like that. So it clearly shows the shortage in the health industry. The second one I would say is the IT technology software development. But the software development is not as bad as medicine because, as you had said earlier, you could actually be in Nigeria and be working and providing those skills. So, and then, with technology, anywhere you're in the world, you can give back. But a doctor has to see a patient. So typically, like you're removing them. But even though in medicine too, what I've seen, especially is where doctors go, but they then come back to establish hospitals or do visitation. So that those skills that they too are learning where they have gone to are then brought back. Because I'm sure, especially like in Lagos, you will see all these large internationally hospitals with international standard being set up, and typically they are usually set up by doctors who were in diaspora who have come back. So that's one of the things that we have seen. So it depends on how a country or an individual relates to that immigration or in terms of labor. If it brings back skills, if it helps us to develop our skills, have access to better quality education, new innovations, understand what other people are doing, and we then come back. So that's why patriotism to the country is important. So that yes, you may go, get better skills, get better jobs, raise capital, but then come back to Nigeria to invest, because Nigeria is a land of opportunity. Yes, we could do better with the enabling environment, electricity, power, all the infrastructure issues, security, but you'll find that you have greater opportunity here. Even just the population alone, you will find that, I mean, with 200 million plus people, anything you want to set up, you will have customers for. And if you now have gone abroad, gained skills, gained capital, you then have a higher rate of success when you come back.
We do need a high level of skilled workers, in the country. How long do you think it would take to fill, most of these positions?
Well, that's is anybody's guess. Is anybody's guess. One of the things that we have noticed that a lot of people want to go abroad for their postgraduate degree. So they've done a first degree in Nigeria, and then they want to go abroad for a postgraduate degree. So postgraduate degree is usually about 2 years. We estimate that they would then work abroad for maybe 3, 4, 5 years, and then come back to Nigeria, typically because they may hit a glass ceiling, those issues of either being now the CEO or partner. It's not only that there's a limit to where somebody who is not from the country can get to, but there is a limit to who can be a CEO. In a company that employs 5,000 people, only one, or some places like in America, may have two CEOs, but that is it. So there's limited positions. So one of the things we do in my bank is support those who want to go abroad with loans and funding so that they can do that training, go for a year or two for your master's, work 3 or 4 years, and then come back to Nigeria. We did a study of looking at the top companies in Nigeria and seeing where did their CEOs and top management study. And we found that 65% of them had a postgraduate degree outside of Nigeria that was funded. So yes, we may say that, okay, no, it's not only people who go abroad who become CEO, but it certainly helps. So that's one of the things that we feel that we can do, that, okay, provide funding, all the things that you need to be able to go abroad and then come back. We encourage people to come back to Nigeria and establish these world-class organizations. As we've seen, I don't want to be mentioning the different companies, but if you look at those companies that we've seen have become what we call unicorns, typically they're set up by Nigerians in diaspora who have come back to Nigeria with the knowledge, with the capital that is required to set it up. So there could be some pluses. And, of course, when you think about remittances as well, is our second largest FX generating revenue in Nigeria. So that's one other area to that is a plus.
We've seen, most of these unicorns raise record amounts, from in funding. But, elections are around the corner. What would you like to see, from the next administration in tackling these issues?
Well, number one, there should be increased investment in education. If you look at studies over the years, we have consistently have reducing percentage of our budget invested as a percentage of the entire budget invested in education. And as a percentage of GDP, it has consistently been below 1%, whereas UNICEF recommends at least 6% of your GDP invested in education. So one of the key things I would like to see the new administration do is increase investment in education. But beyond even that increased investment is, what are we investing in? What areas are we investing in? Primary and secondary education, yes, is typically funded by state government, but most of these states lack the capacity to be able to provide free education as well as the infrastructure to set up a school that can train a child for the 21st century, for the future of work. So at federal level too, we want them to support states to be able to support primary and secondary education, not only universities. I know that even university education is complaining about inadequate funds, but I actually feel that universities should be allowed to generate revenue. For instance, one thing may be controversial, like if you take JAM, for instance, everybody pays to do JAM exam, it goes to the federal pocket, then we hear all sorts of stories about how the money is lost. But if the universities were conducting those entrance exams and charging fees for that, then it goes towards the revenue that the university can earn directly, and they make money and, of course, improve the training that they are able to give. So I think that we need universities being able to generate their own income. If you look at universities abroad, they're doing executive education, things that are commercial ventures that earn them money, and they use that to then be a subsidy for education in terms of degrees and so on. So those are some of the reforms I would want to see in our universities, and of course, establish scholarships. There's nothing wrong in supporting Nigerians to study abroad, especially where those skills may not be readily available in Nigeria. So enable scholarships so that they can school abroad. The network, when you talked about fintechs bringing in significant levels of funding, it's not only that they are doing good business, that's one key thing, but it's because they have the network and it's because they've studied abroad. Maybe they were probably in the same class with those who are now fund managers, and so they know that, okay, yes, we've built trust, this person has been exposed to our systems and we can invest. So I do feel that those sort of things should be encouraged to enable people gain skills all over the world without restriction and improve our own education system. It should be a flagship, a key pillar for anybody aspiring to become president or the ruling party.
All right. Well, let's look at the Naira redesign policy now. That's getting closer and closer. What impact are you seeing for SMEs?
Well, it's very controversial because I was listening also to your news item and the debate at the assembly on the Naira redesign. So, of course, it may give some bottleneck to some SMEs who deal in cash. Largely now, most SMEs that I know that are in Lagos, they'll have a lot of, they do transfers. I was even surprised, you go to the open market, you can transfer to the fish seller for her to actually get paid for her items that she's selling, and not only that you pay cash. But it's true that a lot of SMEs will typically deal in cash. So that inconvenience of going to the bank, queuing to change money may also be restricted. But I think it will help more people become financially included and use digital means of payments, because towards the deadlines, nobody will want to be accepting the old design. So maybe transfers and using electronic means of payment would become more rampant. So that would be a plus. But overall, I'm hoping that the way the banks would implement it and the CBN would reduce the cost of SMEs, because especially when you start thinking about SMEs in the far north or outside of urban centers would have to travel long distances to get to banks to change their money and so on and so forth. And I hope that the CBN would also consider an extension of time to ensure that they actually allow people to be able to change their money, especially those whose cash are genuine, that they can actually change them on time and with little hassle.
Right. Well, we hope the good money gets into the banks in due time. Thank you so much. That was Ms. Bumi Lawson, MD, founder, Edfin Microfinance Bank. Thank you so much.
Thank you very much for your time. Thank you for having me here.
All right, now let's take the conversation further now. Let's look at what's happening in the markets. We had a green close yesterday. It didn't look bad at all. Nice over 0.5% jump in the equities market yesterday. And hopefully we can see that trend actually continue and let it not be some kind of dead cat bounce, talking about the markets. But let's have Anita now to come and bring us up to speed on what's going up. Anita.
Good morning, Laddie.
All right, good morning, Anita. So a nice green close yesterday.
Exactly. I think my crystal ball is broken.
Yeah,
Let me say
must be broken.
Because I wasn't expecting the markets to, make a bounce back. You said something about the dead cat bounce.
Yes.
So, well, we will be talking to our analysts at Stanbic IBTC to tell us if it's a dead cat bounce. But before that, I'll be reviewing the markets.
All right.
So now let's get started. The markets at the close of midweek trading session, 0.54%, or what you call 0.5% increase in points. It was up by 238.69 basis points. So that is how the markets, and we're back at the 44,000 level, which you can see here. And at the same time, the market in valuation term, it went up by 130 billion naira, and that's attributed to the gains by mostly banking stocks, what you call the fugas, the leaders in the fugas. That's the likes of the First Bank, the UBAs, the Access Bank, the Zenith Bank. They all contributed to what you saw on the equities capitalization, as well as MTN Nigeria. Now, if you take a look at the sectoral performance, the greens have it there, particularly the banking sector, which you see here, 4.21%, quite a rally on that counter. And of course, because the share price of these equities, they were already going downwards, but the investors have decided to take advantage of the lower price of these equities. Now, if you take a look at the oil and gas sector, it's still profit-taking on that end, as well as the consumer goods sector. But in terms of the volume, on the activity chart, the volume, it was up by 54.10%. If you can take a look at the activity chart there for the volume of transactions carried out at the close of midweek trading session. Now, month to date, we're back in the green. We're up by 0.5%. Year to date, we're up by 3.11%. Now, we will be talking to Peter Abe, equity trader at Stanbic IBTC, to tell us more about the market's performance for midweek trading session and then what to look out for in Thursday's trading session. So if we have Peter, let him talk to us about the markets. Peter, can you hear me?
Yes, please. Good morning.
Yes. Now, this is coming, the green that you saw for the all share index, that's the market's key indicator, is coming just a day after the October inflation report was released by the National Bureau of Statistics. Now, can you call this a dead cat bounce, particularly when you look at there was no statement whether third quarter earnings season is over. So what can we attribute to investors' renewed sentiment, and what are we to expect in Thursday's closing trading session?
All right. So we saw the market gain about 54 basis points yesterday. Basically, the banking names led were responsible for that gain. Likes of GTCO, Zenith, we saw gains in them. Well, you mentioned inflation. But when we look at the market sentiment, I think it's more of we've been talking about the stocks are cheap at the moment, and I think that's more of renewed buying interest we are seeing in all this, and we suspect this will continue, especially as we move to the close of the year. People will start taking position, and this will just for the numbers that will be coming in next year to take advantage of the dividend yields and stuff like that. So we expect this to continue today.
Okay, Peter, I think we'll have to let you go, but I would have asked what stocks you would be recommending, but I think investors would do justice to that at the close of trading session for today. Thank you for your time on our program.
Thank you.
That was Peter Abe, equity trader at Stanbic IBTC Stockbrokers. Ladi?
Yeah. So that's it.
yeah, but I think my projection, I would like to give my projection. I'm not a trader as well as I'm not an investor yet. But as far as financial journalism is concerned, I would say the market will go back into the red territory. Fingers crossed.
All right, we'll check that, Cristobal. Thank you so much. Senior London correspondent Juliana Olayinka is on ground for the Africa-Dubai Investment Business Summit, but we'll be speaking to Blessing Enakemo, Leaders Without Borders Development Center. They're joining us right there from Dubai. Great to have you on the program.
Nice to be here. Thank you for having me.
So what kind of conversations are being had to drive investment between Africa and Dubai?
Oh, I must say, I'm so overwhelmed with the success already. The high-level networking that is going on, the B2B, the exchange of business cards, the contacts being made, there's just so much going on between Africa and Dubai.
And what are your expectations, for the global investment space? We have so much headwinds right now with rising inflation, and we see, central bankers hiking rates. What are you seeing? What's your projection for after this summit?
What we're looking to achieve really is where we can empower Africa to be economically independent. So investments and investors who are coming in looking to help Africa to look at quick wins where we can work with our indigenous business owners, business developers, local banks where possible, to invest in what we have on ground and to make sure that there's something created that is sustainable. The key word we are hearing today is about finance being sustainable. So I think for us, it would be a win when we see those deals being signed where money is coming in and there is trade happening.
And what value of deals can we, expect, coming from the summit?
Oh, loads, in its millions of dollars. From what I have seen so far, it's still ongoing. I would estimate in millions of dollars.
All right. Well, we'll keep tracking all of that. Thank you so much. That was Blessing Inakimo right there in Dubai. And obviously, Juliana is also right there on ground to bring us up to speed. Thank you so much.
Thank you.
All right. Now, let's move on to other markets. Now, let's see what's happening in the crypto space today. We see it's still extreme fear, deeper into extreme fear. Talking about the crypto space right now, we see the price of Bitcoin still hammered in the market right now. It's not looking like it wants to get above that range. And if you look at the fear greed index there, you see it's 20 points deeper into extreme fear. That's what we're having today. We're in fear zone just a couple of days ago, but with all that's happening, you know, with FTX and the insolvency issue and Bankman, they're still weighing on this market. Talking about the FTX CEO, SBF there, we're seeing extreme fear. Traders are still very afraid in this market. Let's look at the market cap. The $830.58 billion down 1.78%, almost 2% drop there in the market cap for the total crypto space. Volume traded down 3.28%. We see Bitcoin dominance there, 38.34%, just a slight uptick of 0.12%. Let's look at the price of Bitcoin this morning, $16,562. Was trying to get above the 16,800 level yesterday, but got rejected close to 17,000. It's down 1.80% this morning. Volume traded $33.21 billion. That's what's traded in Bitcoin this morning. Lower volume than what we've seen, showing that the sell pressures are getting a little lower this time. Let's look at the price of Ethereum. See price of Ethereum, $1,206. That's down 3.38%. A big drop for Ethereum there. Traded volume traded $11.91 billion, but Ethereum still trying to hold on to that $1,000 level. Remains to be seen if this level can actually hold with the selling pressure on the market right now. Let's look at the top alts by market cap there. We see it's all red this morning. BNB there, $269. Did get to $300 the last time, but got rejected again, down 3.19%. We see Cardano, 32 cents, down 3.84%. So it's majorly red. We're seeing XRP also getting hit there, down 2.45% this morning. Let's see if we have Michael Enaji now, financial market analyst, to bring us up to speed. Hello, Michael.
Good morning, Ladi. Thanks for having me on.
Great to have you, Michael. So it's still all about FTX right now in the market, and we're seeing a lot of companies coming out to say how they were affected by the collapse of FTX. What are you seeing?
Yeah, so we're seeing a lot of contagion of the market. We're seeing a lot of people basically get in trouble because of FTX going under. The more recent one that's local to us is Fcoin, which happened to be one of the biggest fundraisers that Nigeria ever saw for crypto, raising as much as $5 to $6 million. And so basically what happened was, as part of FTX agreements, some of the companies that signed with FTX term sheets, basically they said that they would put the money, some of the money that they raised on FTX. So unfortunately what happened was FTX went under, and so a bunch of their runway also went under as well. It's quite unfortunate. So you saw them have to do layoffs, about 100 people from their personnel. It's quite unfortunate because they were trying to build something. They're trying to build decentralized products for people. They still have some runway left, but that's as far as the contagion so far is felt in Africa. But as of yesterday, DCG, Digital Currency Group, one of their companies, Genesis, which everyone thinks is the adult in the room in terms of Bitcoin lending and borrowing. They stopped withdrawals yesterday. They originate in billions of dollars worth of loans every month, every quarter for companies like miners, hedge funds, and big types of institutions. And so to see a company like to see a company like Genesis go under, and pause withdrawals is a big concern, just because these people are supposed to have been very prudent in terms of their risk management. It's not very good to see them freezing withdrawals, not one bit. It's a sign that no matter how sophisticated you are in this space, all you need is a couple of blow-ups to basically kill any progress that's been made over the past couple of years. And so I really think with all these companies failing, there's never been a time where the crypto has been questioned more. I think now, the clear risk for crypto is real, because of all these blowups. But at the end of the day, crypto will always come back. But I really do believe, like, the blowups we're having now, they're going to lead to a prolonged bear market. It's not something we're just going to come out from and on the other side in like 2-3 months, and it's not going to be it. There's going to be massive regulations coming. There's going to be a lot of changes that have to be implemented. These companies going under or stopping the business operations for a while is not something to be scoffed at all.
Right.
No one expected Genesis to ever say that they would stop withdrawals. Genesis is the lender for many institutions. And so at the end of the day, people are scared. You saw Gemini, one of the largest exchanges in in the U.S., basically stop for a period of time, stop withdrawals for their earned product, which they gave Genesis the rights to run that product for them. So at the end of the day, I think the contagion will be everyone will be fully aware of the contagion in the next 2 to 3 weeks. It's going to take some time for us to know where all the bodies are buried. But once we do know, at least then we can start moving forward. But there will be a lot of regulations coming from this because of all the lending and borrowing and the potential risk to the financial system that exists.
Right.
So right now, we're only a couple $1 trillion asset. If we were a 10, 20, $30 trillion asset, we only know how bad it could have been. But as the small size we are now, it's better for us to figure out some of these kinks before we grow even bigger, and it becomes a systematic risk to the entire financial system.
Well, I guess we'll still keep watching how things unfold with this FTX collapse. Thank you so much, Michael Inaji.
Thank you, Ali.
All right, that's it for the markets today. Thank you so much for watching. Don't forget to join us by 1:30, Business Incorporated, for more updates and development in the world of business. Remember, you can watch this again on our YouTube channel. Just flip over to YouTube, search for Channels Television. You can watch all our other productions. Thank you for watching. I'm Ladi Williams. Bye for now.